In this question, we are presented with a traditional GAAP income statement, and our task is to convert that GAAP income statement into a different format, which is called a contribution margin income statement. While a traditional income statement has costs organized by whether or not they are product or period costs, a contribution margin income statement instead separates costs by their behavior. Variable costs are grouped together, and fixed costs are grouped together. We also have a new subtotal called contribution margin, which is calculated by taking sales revenue and subtracting total variable costs. In order to prepare the contribution margin income statement, we also need some additional information about each of the expenses identified on our traditional income statement. In reality, expenses are often mixed, meaning part of the expense will be variable and part will be fixed. So this additional information here tells us, for each of the expenses on our traditional income statement, to what degree is each one variable and fixed. Now let's start preparing our contribution margin income statement. There is no difference in the sales revenue between the two income statement formats, so we'll start by filling in that same $1 million that's on the traditional income statement. Now let's look at our variable expenses. So notice we have the same four expenses listed on our contribution margin income statement that we see on our traditional income statement. What we need to do is, for each of these four expenses, calculate the amount that is variable. For cost of goods sold, we can see that 70% is variable, so we will simply take 70% of $660,000, which gives us $462,000. We will do the same thing for selling expenses. We can see that 60% of selling expense is variable, so we will simply take 60% of the selling expense on our traditional income statement, which gives us $36,000. Now let's get to the website. We know that the website is 80% fixed. If the website is 80% fixed, that means it must be 20% variable. So to calculate the variable website for our contribution margin income statement, we will take 20% of the $35,000 on our traditional income statement, which gives us $7,000. Now let's look at other expenses. We know that of other expenses, 90% is fixed, which means that 10% must be variable. So then we will take 10% of $20,000 to calculate $2,000 variable other expenses. Now that we've identified the variable component of each of our four expenses, we can add them up to get total variable costs. Now that we have total variable costs, we can subtract that from sales revenue to calculate contribution margin of $493,000. Now let's look at the fixed cost section. We're going to do the same thing. We'll go down our costs one by one and calculate the amount that is fixed. Let's start with cost of goods sold. We know that 70% is variable. That means the remaining 30% must be fixed. So we will simply take 30% of $660,000 to calculate fixed cost of goods sold at $198,000. Now let's look at selling. We know that selling is 60% variable. Therefore, the remaining 40% must be fixed. We'll take that 40% times $60,000 to come up with fixed selling expense of $24,000. Now let's go to website. We know that website is 80% fixed, so we'll take 80% of $35,000 to get fixed website expenses of $28,000. And finally, other expenses. Those are 90% fixed, so we'll simply take 90% of $20,000 to get fixed other expenses of $18,000. Now we can calculate total fixed costs of $268,000. Finally, we can calculate operating income by taking total contribution margin and subtracting total fixed costs. When we do that, we arrive at operating income of $225,000. Notice we arrived at the same operating income on our contribution margin income statement that we showed on our traditional income statement. That is our check to see that we did this correctly, because remember, at the end of the day, all that we are doing is dividing our total expenses on the traditional income statement into the fixed and variable components. And that concludes our practice.